Rajesh Exports Scam. Sebi has alleged that the revenues reported at the group level were higher than the revenues that could actually be verified. For years, Rajesh Exports was one of India's biggest success stories. The Bengaluru-headquartered Rajesh Exports company built a reputation as a global gold giant. It refined precious metals, exported jewellery worldwide, and boasted annual revenues that often placed it among India's largest listed firms. In an interim order issued on June 3, the Securities and Exchange Board of India barred Rajesh Exports and its promoter chairman Rajesh Mehta from accessing the securities market. The regulator alleged massive financial misrepresentation spanning 5 financial years and involving a staggering 15.15 lakh crore rupees in reported revenues. The number is so large that it exceeds the annual economic output of many countries. While the investigation is still ongoing and Sebi's findings are not final, the allegations have already sent shockwaves through the Lal Street, raising fresh concerns about corporate disclosures, auditor oversight, and investor protection. The controversy began with a shareholder complaint received by Sebi on March 11, 2024. The complaint questioned unusually large trade receivables that had reportedly remained outstanding for more than 2 years. Such prolonged receivables often raise concerns because they can indicate difficulties in collecting payments or potential accounting irregularities. The complaint prompted Sebi's to launch a detailed investigation. In October 2024, the regulator appointed an investigating authority. It later brought in forensic auditor BDO to examine the company's books and verify the financial disclosures made by the group. What followed was one of the most extensive probes into a listed company in recent years. At the center of Sebi's order lies a startling allegation. According to the regulator, between financial year 2021 and financial year 2025, nearly all of Rajesh Exports' consolidated revenues came from overseas subsidiaries. The contribution ranged between 97% and 99% of total reported sales. The most important subsidiary was Welcambi SA, a Switzerland-based gold refinery acquired by Rajesh Exports years ago. Welcambi is widely regarded as the operational backbone of group's international business. However, when auditors examined records linked to Welcambi and other subsidiaries, they found a major mismatch. Sebi alleged that revenues reported at the consolidated group level were vastly higher than the revenues that could actually be verified from subsidiary records. The result was a cumulative discrepancy of 15.15 lakh crore rupees across 5 years. According to the regulator, this represented almost the entirety of the company's reported consolidated revenues during the period under review. And I'm being joined by Sriram Subramanian, who's a founder for InGovern, as well as Karthik Malhotra, who's an executive editor with News9. Thank you very much, both of you, for joining me. Karthik Malhotra, let me just come straight to you first. Karthik Malhotra, the biggest scam to hit the Dalal Street, or the biggest accounting scam between the two, where does it really lie?
No, so I think, we have had massive scams and massive scandals, and, India, like many other countries as well, is not really immune to stock market scandals. And I think Mr. Subramaniam may be able to sort of jog our memory clearer, sharper back. But I think the Satyam scandal was almost, if not bigger, was of course something that really, made headlines back in 2008, 2009. So we have not really been Harshad Mehta scam, etc. I mean, the list goes on and on. But in recent years, yeah, I think fair to assume that this is among the bigger scams that we have come across. Now, at the heart of the issue are, Sneha, 4 major issues. First is no distinction between the consolidated revenue and the standalone revenue. So standalone revenue is what Rajesh Exports Private Limited sort of makes on its own, the company listed here in India, whereas consolidated revenue is something that accounts for all the subsidiaries anywhere in the world. So as much as 97 to 99%, and that is something you also mentioned, of the consolidated revenue was actually accounted to overseas subsidiaries, especially Welcambi, which is based in Switzerland. Now, for years, in fact, ever since the investors sort of raked up the issue back in 2024, Sebi had been trying to probe and trying to get sort of records of the transactions undertaken by Welcambi, and it was always sort of resisted and met with a hard wall where for the longest time Rajesh Exports kept saying that the sort of entity does not maintain records and the Swiss law does not permit Welcambi to share with the parent company, which is Rajesh Exports, the sources of revenue and the transaction level data, which of course was later refuted by Sebi, saying very clearly that that the Swiss laws pertain only to individual personal identifiable information and not really company records. So first, of course, is this whole sort of difference between standalone as well as consolidated revenue. Number two, again, a major sort of, structural sort of cause here is what is really getting accounted for. Because remember, Rajesh Exports deals in the bullion market, gold exports. So are the books, whenever the sort of details come out, are they looking at the transactions when we talk about processing, which is a fraction of the cost, or are you looking at the total sort of volume of gold which is getting accounted? And that the latter seems to be the case here. So somebody on social media gave a fairly interesting analogy. They said that you're running a toll plaza and you're collecting toll from the cars that pass through that toll booth. Now, are you accounting for the toll that you are collecting, or are you also accounting for the value of every car that passes through? And that sort of, explains this conundrum that investors and, of course, the auditors are dealing with. Number three, of course, is a lot of transactions routed through Rajesh Mehta's personal accounts. Now, why would a company, a listed company no less, actually route transactions through the promoter's personal account? And that is something which happens to be another large sort of question mark on, on what is really going on in the company. And now, of course, the forensic auditor BDO is going to get more details, and we should know in coming times how this is really going to pan out from here. But yeah, of course, among the bigger scandals to rock the Indian stock markets.
Right. In fact, Sriran Subramaniam, if you can come in, and as Karthik Malhotra was also explaining, a lot of this is about how the funds were routed without the board's approval. There were no disclosures that were made. What does this really mean in a very layman's term with respect to even the investors and the disclosures that have not been made? A lot of these things are now being spoken by people who may not really directly be involved in possibly the day-to-day tradings, but have their investments in the market. Simple questions running on their mind. Yeah. What are we really staring at?
Specifically, a fraud is a fraud. I mean, somebody who has an intent to defraud investors, somebody who has intent to fudge the financials, somebody who... That's where, if you see, no domestic institutional investors worth their salt has a shareholding in Rajesh Exports. And even when the peak market capitalization of Rajesh Export reached 20,000, 25,000 crores, there was no DII who is invested, no analyst coverage. Why is that? These are red flags. If a company which has 20,000 crore, 25,000 crore market cap has no analyst coverage, that itself is a concern. It doesn't even have investor calls on a quarterly basis. So all these becomes red flags because somebody here, analysts or even fund managers and mutual funds may have analyzed the company, found that this is a total fraud company, and then not taken position. So Rajesh Exports has long been like this, where 95% of revenues have been coming from the Swiss. As Karthik said, a bulk of it could be trading income, which itself is suspect. And trading income with high margins, that is permitted. Retail has 1% gross margin. But yet, here, Rajesh Exports, because it's 95% of their revenues is coming from Switzerland, Welcambi, and one doesn't know what is the credentials of that entity, and whether, and as Sebi has pointed out, all those revenues is just fraud revenues. And fraud is fraud. I mean, in fact, he should be sent to jail, if anything. And Sebi's order should be followed up with that. Unfortunately, in India, the measure that is taken is only of banning from Securities, which is a very lame thing.
Kartik Malhotra, what are we really staring at this point? How is the market responding to this? What are we expecting in days to come?
Right, so markets at a broad level, see, Rajesh Exports is not part of the Nifty 50 or the Sensex bucket. So when you look at the markets per se, even the broader markets as a whole, markets are holding on fairly okay. It's not a move that has really shaken investor confidence as yet. Of course, this is one company, so it's one rotten egg. You can't really say that the entire basket is infested. So, markets are more or less flat this morning. In fact, no change in the Sensex and the Nifty 50 levels from yesterday's closing. But Rajesh Exports has been hitting lower circuit. In fact, that stock has been in free fall ever since June 3rd that we actually first heard of this report. So even this morning trading activity has halted because the stock is down about 5%. Investors who have invested in that particular scrip are obviously, their wealth has been eroded, and that is again one more concern which again, to sort of go back to Mr. Subramaniam, the point that he was trying to make was that you don't really have a list of the transactions being undertaken by, well, can be Switzerland. So one doesn't really know what is the order book looking like. In fact, the investor who had first raised the concern back in 2024 had cited that the accounts receivable have been pending forever, and it hasn't really 12,000 crore rupees or something, if the number serves me right, was stuck in accounts receivable for many years before the investor eventually decided to write to Sebi to sort of investigate the matter. So the point is, do you have real customers? Do you have real transactions? And if so, why is it so hard for you to share that data with the security regulator? And if you don't have that data, then of course, like Mr. Subramaniam also mentioned, that a fraud is a fraud, and the strictest action should be taken. Now, the real question is what happens to retail investors, because DIIs, even FIIs for that matter, have not touched this scrip again because of the discrepancies which have been in the books for the last many years. But what happens to the retail subscribers, the retail investors? Well, for the foreseeable future, they are looking at wealth erosion.